Happy Friday, everyone. It's 8:01 a.m. Chicago time, coming at you from the Financial District, also called the Loop, here in downtown Chicago. Thanks for joining me. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. It is like Friday, so I'll start by saying if you've been coming to the Strader Bite, whether it's your first time or for the last 3 or so years, that I've been doing these on almost a daily basis. I'd like you to hit the like button at the end of the day. At the end of not the end of the day, the end of the video. If you don't see a like button, then go to the bottom right corner of your screen and hit the YouTube button, which will take you to the YouTube stream, and then just hit the thumbs up button. It gives us a few things, including support when I need it. Um, The other thing is that make sure you're always viewing this in 1080 HD. You can do that by hitting the settings button at the bottom right corner of your screen and switching to 1080. It doesn't automatically do that. It goes to 720. The screen is a lot crisper in 1080. I'm broadcasting in that resolution. Anyway, let's get down to business here. The overall stance of the market right now is lower. The euro is strongest, up 64 pips, followed by the euro stocks again showing strength, up 13 points. Crude oil trading down at 52.67. Expecting crude oil to find a bid here soon and start rotating up to about 53.10. We'll see. And then the laggard is the U.S. dollar and gold. Gold trading at $1,228.20 on the April futures contract. But overall, a mixed bag. Mainly, money is moving into safety. The U.S. bond is up one tick, trading at 149.04. And the U.S. Treasury, the 10-year U.S. Treasury, is down two ticks. So it's a mixed bag. It's a mixed bag coming in this morning. As far as the news flow, this morning, I'm not seeing too much in the way of things that are moving us. Of course, the news is very concentrated nowadays on the political scene, the political drama that's unfolding here in the U.S. as well as in the Netherlands and France. And that's likely to drive policy going forward, and it already is. But overall, not seeing any key releases. The UK had the February services PMI come in weaker, 53.3 versus 54.1. And as far as the expected what's expected for today, I want to remind you that Federal Reserve Chair Janet Yellen is going to be speaking on economic outlook at the Executives Club of Chicago at 1 p.m. Eastern. So people are going to be looking for traders and institutions will be looking for clues on whether or not the Fed will hike rates at the on the March 15th meeting. So in 2 weeks, we get that big FOMC meeting, for which the probability of a raise went from around 35-ish% to 50% to 80 something percent, and currently the probability data by Bloomberg is putting the Fed hiking rates again at 25 basis points in this next meeting at 88%. So that's the big thing for today to watch out for. Again, that's at 1 p.m. Eastern, 12 noon Central, 6 p.m. GMT. As far as what else is on deck for today, we're getting U.S. Services PMI February 54.0 at 9:45. At 10 o'clock Eastern, we're getting ISM non-manufacturing for February, expecting 56.5. And of course, the Baker Hughes rig count, which hasn't done anything for us, at 1 p.m. There's a slew of speakers today. At 10:15 Eastern, we get Fed Speaker Evans. At 12:15, we get Fed Speaker Powell. At 12:30, we get Fed Speaker Fisher. At 1 p.m., we get Fed Chair Yellen. At 2 o'clock, we get Canadians BOC Speaker Deputy Governor Wilkins. I don't expect that to be much of a mover, but we essentially from 10:15 onwards, we have somebody speaking every couple hours or every hour. So pay attention to the news if you have it. If you don't, drop me a note. We do have a line on a live news squawk feed at a heavily discounted rate. It's not for everybody, but drop me a line and I'll see if I can hook you up. Let's move on to what happened yesterday. Yeah, the way the Fed fund probabilities are determined are either through surveys or through the Fed fund futures. That basically gives us the position that the market has. That's the position the market has. Yesterday in our Trader Bite, um, I was looking for the primary hypothesis, given the way we exited the overnight session and where we were at 8 a.m. Central, 9 Eastern. It looked like we were likely to push higher. The overnight session closed fairly strong, and so the expectation was for some dissonance on the open. Expected an open auction in range, in value. So I was looking for a high probability touch of the 2396.50. Whenever we open in value, statistically, there's a high probability that the point of control will be touched in the first 2 hours. It's a simple study to do. I encourage you to pull the data into Excel and look at it over at least 500 days of trading and at least 200 occurrences. So after the open auction, the expectation is for the market to take an impulse higher, to test the prior day's high again, retest the 2400 century figure, and then fall off into the afternoon session and finish somewhere in balance with what we did on Wednesday. That did not happen at all. So, meh, meh. And that's cool. I mean, the idea is not to be right here. The idea is to have a plan for what the market might do. The other hypothesis, which was almost complete, almost was incorrect, but mainly because, again, I'm going off of the context of the overnight session and how it closed. So the expectation it was for the market to push higher, and this is one instance, one outcome where that probability didn't play out. But the overall idea is that the market pushes higher, finds sellers, and then you get this strong move down, and the expectation was for the market to push down into 2385, 2384.50, the LVN that I circled here. That was the key target below for the second hypo. What we got yesterday is basically this plan, but we went straight down off the open. It was more of an open auction in range that has a downward skew with a little bit of with a soupçon of a drive sprinkled on top of it, drive down, and then it tried to balance up a couple times, and then we had this big move down, pull back, and then we sat sideways. We looked to rally into the close. The expectation for those who attended the AMA, the S5 AMA yesterday, I did say that I was looking for 91, for it to push to 91 into the close. It got to 88, and then it sold off into the afternoon, which to me was a surprise. I mean, I expect anything when it comes to the market. That's why I don't use words like should, must, has to, needs to. You've got to stay open-minded about what the market could do, because as soon as you lock yourself into a bias, even though we trade with a bias, you have to trade with a bias. When you lock yourself in with words like should, must, has to, needs to, will, things that are very definitive and dictating what the future holds, what happens is you begin to defend those biases with your account in the form of expanding risk, adding to losers, things like that. And I got to tell you, it has cost me a few $100,000 to just stop doing that early on in my career. And so here it is, we open. There's nothing on the upside before the move down, which was what was expected. That was hypo 2. Nothing here for us to check against, lean against, and hit the bid with, hit the bid against in order to get short on hypo 2. It just dropped right off the bat, but then it had a full rotation back up to the mid, and in a continuation, and it says it went sideways, right? And so we finally get to the target below at 84 and a quarter right here, the LVN, and then we go sideways, and then later in the afternoon, I was expecting it to push into this area right here. This area right here, that's what I was looking for the afternoon, and it pushed to mid again. So mid had several tests here. The best setup for the day was this here, the pullback to the IB low. Why? Because we had impulse, pull, continuation, and then we had an impulse into this area here that had IB low, VWAP, and mid, which is good for probably a 3-point rotation or so. It yielded about 4 on that, and then we are done, right? We're looking for maybe a potential for a push down, but really the way these things move is, and the reason inverted head and shoulders show up so much in a bull market is you get the impulse continuation. So this is the impulse continuation, and then you have the pullback, right? And then you have the corrective higher low here, so you end up with a correction here, and in general, it'll do this, and then it pushes the other way as it finds its buyers. Ultimately, the goal of the auction is to get as many buyers and sellers to meet and discover consensus on value and what price the current conditions are pricing the market at. That's the goal of the market. That's the primary function of the market. You've got to understand that it's the foundation of an auction, and the market is an auction. Whether you're buying S&Ps, crude oil, gold, a Swiss watch, a house, a car, it doesn't matter. If money is about to be exchanged or services are about to be exchanged, there's an auction going on. We call it a negotiation. But that's what the market does electronically. Every time you trade, you're participating in a global negotiation on price. And sometimes things go your way and sometimes they don't. And so the market then fails and gives us this large rotation, the largest rotation of the day, down 7 points. So we expect a pullback to about mid of the rotation, which was about here, and a continuation trade, and we finished near the lows. That's the play. That's how things played out. We're in the gap zone that was left behind 2 days ago. We're in that gap zone. The mid of that gap zone is just below, right here at, guess what, 2374. Where's the low in the overnight session? The mid of the gap right there. This is the mid of the gap. It's also the overnight low. The market has bounced back up into the range, into the lower end of the range. The profile does not show clear consensus. It is a boxy profile. There's no taper at the top. There's a poor taper at the low. And so the market is not able to find its balance yesterday and finished closing out of balance. The point of control sitting outside of the prior day's range in the gap zone. This is an unstable situation, which to me, in my opinion, creates opportunities for day traders for today. Fortunately, it's Friday. It's one of the lesser volatile days of the week after Monday. It's actually the second worst volatility day of the week in general. So I don't know how far or how much we'll get out of it, but that's how things are set up. I've talked a lot. I'm going over my time here. A quick review of the overnight. So you can see here we open right where we close, and then we test lower. We have the same situation as the day before. We cannot get above mid, and then we have an impulse down, and then we just sits sideways with a weak low and a double bottom at the mid of the gap zone. This is why I don't remove gap zones just because we enter into them. I don't shrink them. I don't remove them. I keep the original gap in place so I can see where that midpoint is. There's a statistical study that I've done on that. And then we had an impulse up at the European Open, and we've had a pullback to VWAP, and it's looking like it wants to push higher. So it leaves us with a very odd spot for where we're likely headed. Here's what we've done for the week. For those of you who were here on Monday, I talked about how compressed the prior week is and how much volume there is, and I talked about the high potential of a break away from this completely bell-shaped, completely balanced week the week before, and I warned that it's likely to make a strong move out of here, and here we are. We've got a gap and a push higher. We moved approximately 50 points or 40 points away from where we were at that point on Monday. So you could see on the auction unfolding before your very eyes. You got to pay attention to balance. You got to pay attention to compression. Compression leads to imbalance, and imbalance is tough to catch, but that's where the volatility in the money is, in my opinion. So let's pull back and look at where we are. We're opening just slightly in range. My expectation is for the market to pull back a little bit, find its buyers, and I'm looking for the overnight high to be taken out. Again, moving back into the auction, into the prior 2-day range here. Because these 2 days overlap, I'm going to draw. Again, here we have another situation with a gap and somewhat of balance. This isn't exact balance here, but we have a situation where the point of control is just above us for the MC. I'm looking for it to test lower below yesterday's range, find its buyers, and then move back up into the range. If it does commit a test below, I expect it to get about 11 or 12 points, which puts us at 87 on the high today. That's hypo 1. Okay, hypo 2, which would be a nicer hypo to have, is a continuation of the auction in the overnight that pushes us up into the prior day, and then it finds its sellers and it starts to move down into the gap zone again. And later in the session, I expect it to push back up towards 81. So hypo 2 is looking for a test up, drop out of range, test lower impulse, continuation, and then reversion back into the end of the day Friday, back into the lower end of the range as it hangs on to, as it squeezes the gap, but still hangs on to the territory it's already won. So that's what I'm seeing. Again, it is like Friday. Please hit the like button as you head out. And again, make sure you have your own plans. Generally, I come in with 5 plans. I'm only sharing 2 or 3 because it would just take too long to go over everything. But have your plans and just sit there and watch what the market does. After I create the plan, I'm relying on statistics and order flow to locate where the trades should be. And then once I see that the things, one plan is setting up over another, that's when I hop on, and I've done a couple of execution videos to show how that happens. One of them is linked in the description of this video. You might want to catch. Once I hop on, I just basically use the current market information to control the trade rather than a fixed stop. Not advocating against fixed stops, but I'm much more of an active trader rather than a passive one. Anyway, I'll leave you with that. Happy Friday. Don't burn a hole in your pocket. Don't fight the trading today. Just go with the flow. Remember, as a trader, you are not a tree standing up against the winds. You're more of a surfer looking for a good wave to catch. You cannot create the wave. You cannot generate it. All you do is look for waves, and sometimes something looks great as a wave and doesn't go anywhere by the time it gets to you. So just surf the waves, okay? That's your goal. Don't fight. Don't fight the ocean. Just find your spot and see if you can use the energy that the ocean has in it to carry you for a ride as far as you can go. Good luck, and I'll catch you later. Take care.